Well, good morning, everyone. Welcome back to the channel. So, today we're going to discuss not only high yield dividend funds, but the potential for long term holds, which would kind of be the best of both worlds. Because we tend to assume that with these high yield dividends, that they may not last forever. In the case of Yield Max, Defiance, and some of the others. So, I figured we would look at some more stable ones potentially with high yields that could be long term holds in the portfolio. So, I've had some commenters request me to talk about NEOS funds, so I figured I would start out with SPY, and I'll also go over SPYT, and we may add some to the list as we go as well. Anyway, welcome everyone. Yeah, keep watching that, and then you can watch this one next. You can do the coach's video wheel strategy. I was going to cover the dividend wheel strategy, but I switched it up at the last minute. The 8 ball told me that this was the hot topic of the day, so I figured I would cover this. Okay, everyone, so let's go right into it. Okay, let's see. Yeah, we had a good live discussion last night. One thing we ended off on, we figured out that Dillard's has actually been a really good investment because of buybacks. But anyway, Dillard's is not a high yield dividend fund, so we can't spend too much time on that. Okay, so the NEOS S&P 500 High Income ETF, also known as SPYI, the quant's rated as a sell, but we'll ignore that for now. Seeking Alpha analysts have it rated as a buy. If we look at the long-term price performance of it, it's only been around for like not even 2 years, but it looks pretty stable. It's dropped down to like 44.61 in September of 22. Its other low point was October of 2023. So that might be like a cyclical thing because September usually tends to be like a really down month for markets historically. And of course, October comes after September. So it was kind of close in comparison. So yeah, $45. It's gone up $5 since then. So if you had got in at the October lows, you would be up by like 11%. Um, so pretty stable overall. It looks like the NAV isn't fluctuating as much. We're up 3.78% for the year. As far as the dividends, A plus for dividend yield. 50-cent dividend was just paid March 20th, or as some of us say, 50 cent. Dividend history, let's look at this one. Okay, so we're getting about 50 cents a month. So this is pretty good. So they keep inching it up a little bit too, because we've gone from 48 cents to 49 cents now to 50 cents. So 50.14 times 12, that's a $6 dividend yield per year on a price of 50.02. So that's a 12% yield. Not too shabby. So I would have to rate that one as a lot more long-term potential than say some of the higher yield max ones. I mean, some of them, are at like annualized 120%. I mean, that would be amazing if that lasts, but this would be, I think, a more stable alternative. The next one I want to look at is the SPYT. So that's the Defiance S&P 500 target income. Now, this is so new that it's hard to do a real comparison on it because it's literally a month old as of today. It turns 1 month old today. It's dropped by like 15 cents, so not terrible. It's fairly stable NAV. Dividend yield, it shows 1.71%. It had a 34-cent dividend payout April 1st, and I believe that was the first payout of the fund because the fund is so new. But if we sustain at 34 cents, and of course we could grow because this fund has a slightly different strategy than the others. So 408 divided by 1990, that's a 20.5% yield. So that one is really good if that one could stay stable. Then, of course, the curve funds too. I'm not going to cover everything in the scope of this video. I'm going to focus it maybe on three because I have to get going soon. But um, the curve funds are also the same strategy, more stable yield and more stable NAV, a lower yield but more stable NAV and more long-term potential. Let's see. Welcome. Just gonna watch this one. Oh, okay. Well, yeah. Save. Live in the present, right? Orion says, how does that compare to SPYT? They say it will keep up with growth. Do you think that's true? I'm not sure, but luckily I happen to be in possession of advanced financial forecasting equipment, such as the 8 ball, that whenever I'm in doubt of a key question, not just in investing, but in life, I can very easily ask it. So let's see. Uh, I already forgot what you asked, but it says concentrate and ask again. So maybe I should actually concentrate and ask again. Uh, it says, as I see it, yes. Okay, so that's the short answer. The long answer would be, um, yeah, I mean, I think SPYT, like you're saying, will keep up with growth. Absolutely. It could be the better one of the two. Mr. Ollinger says SPY has potentially a long call and the strategy should get some more upside. Yeah, I like more upside for sure. Do we think ETFs like SPYI will still be in business in 10 years? Worried about longevity? Well, I mean, the way it's looking compared to some of the other ones, I think so, but I mean, we never know. Question for me. All right. Which of the S&P covered call funds is the highest paying percentage? SPYT, SPYI. Right now it's SPYT of the two. XDTE might actually be, well, let me look at that because I just did a video on it yesterday. Um, let's see. That this one might actually be higher because it's weekly, and I need to name that darn tab. I keep on like not naming it. Where did I put it? Oh, here it is. Um, XDTE, I have it pegged at uh, it's like a 17% yield, so it's like in between the two right now. So right now of that group, it would be SPYT. So yeah, in theory, XDTE probably generates the most premium sold per month, but that doesn't mean it's going to total return the most per month. Yeah, agreed. SPYT claims 20%. SPYI is around 12%. SPYI has a longer history, might have better tax treatment too. True, true. You have a lot of yield max, but you're starting to see the light that it might not be as good as I thought because of because of videos by Capital Mindset. Yeah, I've talked to him too on here, and I'm definitely, I'm definitely questioning my philosophy when it comes to dividends and stuff. So yeah, I mean, dividends are great and all, but again, like I say, not free money. So I don't want to go down that rabbit hole in this video, but we'll keep on debating it back and forth, chopping it up as they say. Okay, next one we're going to look at is, let's see, JPYI. This one used to be one of my favorites. They have it rated as a hold. Uh, it's been pretty stable if you look since 2020. It's up $7 a share. It was as high as 63 in 2021. It's getting back to that. Very low expense ratio. JP Morgan, I have to say they do a good job. Dividend yield gets an A plus. Consecutive years of dividend growth, we'll ignore that. Okay, so see, it does fluctuate a lot because at one point they were paying like 45 cents a month. So if we take that, if they can get back to that, which I think they can, and the 8 ball's already confirmed for me that they can. So divided by 57, that's like a 10% yield. So I think they can get back. They used to be at like 12% because the NAV had not actually appreciated as much as it is today. So it was like a 12% yield. As a bonus, I'll look at JEPQ actually. Um, JEPQ was another good one. It's slightly lower. The Nasdaq equity premium. It's up 20% in the last year. That's really good. I need to look at the total return of this one, actually. We've got it rated as a buy by the quants and the Seeking Alpha analysts. But let me look real quick at dividends over here. Dividend yield is a 9%, A plus, 43 cents. This one's going to be a little higher than the other one I just said, the JEPI, because we're dividing by a lower denominator, right? No, it's about the same, 10%. Let me look at charting real quick and go here. I'm not going to do a comparison. But let's see, as far as, okay, performance total return, let's just look real quick. Heck with it. Why not just add them all? JEPI, we can get 7 at a time. SPYI, SPYT. Okay, in terms of total return, JPQ is the winner of the group. SPYT is really too new for comparison. We'll take it off for now. SPYI is 17.47, JEPI is 13.58, JPQ is 33%. So that would be a winner of the group, and it's pretty sustainable long term from what it appears. BST, yeah, we'll save these for future videos. Post these in Discord. I'll look at these in future videos. Let's see. Anyway, okay, let me do a couple more comments here. Oh yeah, I read that one. If the parent underlying is going up, cover call ETFs is at least going to go sideways. uh, Is at least to go sideways to up. I agree. Long stock still has the same issue of everything else. The big equity sell off event, 10 to 15, 20% drawdowns. True. OBST. Maybe I can look at that real quick. Oh, BlackRock Science and Technology. Huh. Let me see total return there. I'll have to do some more videos on BlackRock because they're coming out with weeklies too. That's up 25.48% over the past year. So, all right, you all. Thank you all for tuning in. Like, comment, and subscribe, and join Discord. And we will see you all later today. Thanks so much. Have a good one. Bye.